How are you, folks? The Enzo Di Cosenzo podcast. Here we go. January 14th, 2024. So for everybody in the spring, no matter what school you're at, no spring 2024 semester, this is the what we're going to be talking about in this semester. So let's get to what's going on. And actually, before I even start, something just because I have the camera on here, you guys can see this. This is Adobe Acrobat Pro, and this is the 2017 version. It says complete desktop solutions for working with PDF documents. I'm not requiring you to buy textbooks. And you'll see it online on the Blackboard site. All the reading material is online. You don't have to buy one single textbook. But what would be useful if you had it would be Excel, spreadsheet, and hopefully that's not too big of a deal for people to have that. And uh, your own computer, obviously, and the Adobe Writer, so you guys can create PDF documents that combine Excel, combine some Word document, and then you sort of it's called entombing. You entomb it in a document that can't be changed by some unscrupulous person, of which there's many in the world today, especially attorneys that are out there, okay, in Essex County. So yeah, so people, you send your financial analysis or your legal documents or your letters of intent, whatever documents you're generating, you can work with them in a sort of a peace of mind, secure way. All right, so let's talk about what we're going to do this particular semester. This shouldn't be too long. Okay, there's a bunch of syllabuses out there depending on the course that you're taking with me. But basically, what I'm starting with this particular semester, and actually let me get the specific file out there. It's not here. I'm shaking off the rust a bit, folks, so be a little patient with me. Yeah, here, template. Okay, this is what's posted to Blackboard for most of you. This is posted to Blackboard for most of you. There's two tabs, and you have, number one, you got to be comfortable working with the tabs. Okay, that's a big part of it. People say, oh, people have this expectation that an Excel spreadsheet is just this, what you can see, right? Just the little part that you can see. That's it, and it something like this, right? That's not it. Okay, there's if you page down, there's plenty of page down, and again, there's varying folks with varying levels of experience out there. This is net present value topic. And again, there's various courses that I'm teaching out there. A lot of corporate finance courses I'm teaching. If you're in the microeconomic sections or whatever course every semester I deliver the same material across all my classes. That's how I do it. There's people disagree with me on that, and oh well. I mean, I don't know what else to tell you. Okay, but that's how I approach this. And then and if you take me in the fall, it'll be something else. So I'm very proud that I've never repeated myself any semester. I have 300 plus videos that are up there. Okay, so we have a lot of videos that are posted, and you can find. I'm making them public now all the time. I don't know, for a time period. I don't know why I was doing it. I was making them all private. I never went back into it and reset the. I never went back and reset the permissions for some reason. But net present value is big for valuations. Okay, so if you're in the micro class, of course it's supply and demand and equilibriums, and we'll hit all that stuff. And actually, the first thing that we're going to do probably in February sometime. We're going to start this across all my classes. And also, even if you're in the micro classes, I do like to go over what the central bank says. Folks, all I can, even though that's a macro topic, but folks, all I can teach you is what I know to be useful out in the world in being I'm searching for the right word. Economic analyst. I would say financial analyst, but economic analyst is probably the more overarching word that includes legal documentation and things of that nature. I have a multi-vectored educational background. I have degrees in accounting and finance and engineering and legal studies, and that served me very well, because I can interact with lawyers and I understand where they're coming from. That's a big part of things. It's hard to understand that at 22 or 25 years old. But when you're 35, 45 years old, and you start to see how much you're spending on lawyers all the time, the firms that you might work for, you start to understand how important that that facet of things is. It's not just doing statistical analysis of so folks of data and economic data. I'm not saying that's not important. That's important. When I was at Value Line, we had a department that did that, but they weren't front and center. I'm telling you, it's just the honest God truth. It was the analysts. The securities analysts were number one. What they thought was what we did. Sure, the statistical modeling people, very important part of the puzzle, but they no one came to us because of our statistical analysis. And if you read the book When Genius Failed, which was about the hedge fund business up in Connecticut in the 1990s, in the mid 1990s. I'm not discounting the importance of statistical analysis and normal distributions and understanding probabilities and all those. I'm not saying that stuff's not important, but you have to know its place. Okay, that's a very important thing. And you're lucky in the sense where you're learning from somebody like me, where I do this for a living. This is not something I read in a book someplace. I mean, I went to school. I have degrees in finance and all those other kinds of things, but it's not something that I, just heard about somewhere or read in a book, and it's some antiseptic thing. It's a real thing. It's how I make money. The real money that I make is out in the world is from advising on transactions. Okay, and I get a percentage of what the fee is, for doing that, and for really having, and also when we sit down with central bankers and the macroeconomists and we have a conversation, everyone on my team looks to me to have that conversation, because you want to sound, if you're looking for a regulator to approve an acquisition, you want to sound like, you're not just sound, you want to know what you're talking about, and be able to communicate on top of that, be able to communicate it, not just sound like that makes it sound like you don't really know, and you're sort of fronting. There's plenty of people in the world who try to pretend they know this and know that, right? But I want to always give comfort to the central bankers in the countries that we work in, that we do know what we're talking about, and we do know how to manage banks. I'm involved in healthcare. I'm involved in banking, investment banking, and basically investment banking, not so much commercial banking, but investment banking and agricultural projects. We have some agricultural projects where we're growing plants that are used in pharmaceuticals in very far from America, very far from. I'll tell you, I was thinking about this while I was at my doctor the other day. I think what happens is in America, I remember I interned up at IBM long ago and lived up in Westchester County, New York, which is near Greenwich, Connecticut, and near the General Electric plants up there, and there's IBM plants in Dutchess County, and all that 1 or 2 hours north of New York City, there's a lot of General Electric and IBM and facilities still there. Endicott, New York is where IBM started out. And I forget the town, I think Fairfield in Fairfield County, Connecticut is where the General Electric facilities are. I think they've polluted the Hudson River and the ground with byproducts of their manufacturing processes. And this is all, I'm not exposing something that's not known for a very long time, back to the Jack Welch days at General Electric. And I think that impacts what you can grow in certain parts of America. It's like the wine in France. You need a certain climate and a certain humidity, and the ground has to have certain organic compounds in the dirt to grow your plants. And you have to have the right soil and the right environmental conditions to grow these specific plants that can be turned into medicine. And that's quite a business. Okay, that's quite a business. So when I'm involved in those things, we're raising tens of millions, hundreds of millions of euros or dollars, if you want to say dollars, to work on those projects. And I'm very proud that I've been a big part of doing that. And you're learning from somebody who's advised on those things where they've succeeded, and we're in the process of succeeding even more. Okay, so I think you should feel good about what I'm telling you is important. I don't just read it in a book someplace and that's the end of it, kind of a thing. Okay, it's a real thing, and it's really people who command the resources, command the billions of dollars to do these projects, what they're thinking, and helping you feed into what to tell them, what they want to hear from you, kind of a thing. And I remember one of the vice presidents a number of years ago when I started in as a private banker, one of the guys had said to me that you really answer our questions, and I think a big part of that is just being a very good listener and not doing all the talking all the time. Okay, and I think you can start those habits in class. Now, I was very lucky. I went to a very good high school, and to be very honest, hey, I went to NJIT, I went to Fordham, I went to Queens College, learned a lot across those three wonderful colleges. But I think I learned what I needed to learn to be successful from the Jesuits in high school, and that's when I was very dedicated, loyal to them, dedicated no matter what, and for better or worse. That's how I sort of see things. I'm very grateful to them for teaching us when I was a teenager, physics and computer programming and calculus, and everything else was just extra. Okay, so I was now I'm, for better or worse, I don't know what I don't have kids myself, so I don't know what the high schools are like today, but I suspect I have an ex-girlfriend who worked in the school system in Newark for a very long time, and she's about to check herself into a mental hospital. I mean, she's just beside herself in terms of what she's asked to do, and the political wrangling and things of that nature. It could be a very volatile, tough situation to be in when you're in these cities and the Pattersons and the Newarks and places like that, where it's just very political, and it's every man for himself kind of a culture. It's tough. That's tough to work like that. So anyhow, also here, let me get to Black. I'm just gonna pick something from Blackboard, and we'll just go from there. Oh, Blackboard like that. Okay. No matter what school you're at, don't worry about this. Whatever school this is. I'll pick a very basic course. We'll pick the 10204. Okay, we'll pick this one. And again, other schools, it's going to have this. You have your textbook. I gave you an economics textbook. I gave you an accounting textbook. I gave you a finance textbook. I know NJCU. I know you guys. It's with the tuition. You buy the book or something, but yeah, you can do what you want with that. Read along with it with the appropriate chapters, and that's all well and good. I have the syllabus here, and I list the topics in the syllabus. I'm not so overly worried about what the syllabus looks like right now, but really how the course is going to be run. The course is run all assignments, okay, and we're trying to give you an experience where we want to give you an experience where it's like you're working for me. I got a comment at St. Peter's long ago that someone had said to me, working for you was like working in a job. And it was about probably 6-7 years ago. Someone had said that to me, and I appreciated that comment, where I'm just trying to make it realistic. There's plenty of classes that do multiple choice exams and pencil and paper exams and those, but I want you to generate a set of answers to a bunch of questions, support it with some kind of a model, support it with some kind of data, support it with current topics and current thinking and current conversation. That's what's useful in private banking. I can't teach some other job or something else, or working for an accounting firm. I don't know anything about anything. I don't know anything about that stuff. Okay, but what I do know is people I work for, the stuff that they ask me, I try to give them. They'll ask me 5 questions. I'll come up with page-long answers and a model to support it and things of that nature. That's reality. When I work for Value Line, it's like that. The group that I work for now, the private bankers that I work for now, it's like that. So that's all. I can't really discuss something that I have no idea what it is. This is just the general form of the syllabus looks something like this. When we meet, here's the final exam and things of that nature. My contact information, again, depending on the school that you're taking this at. We list some of the textbooks here, but don't worry so much about what's in here. It's all going to be assignments. We don't have any sit-down exams. I appreciate if you don't have late assignments. I appreciate you would post the files as we go. There's dates here, when St. Peter starts, when NJCU starts, those kinds of things. Some of the rules, you want to be a good neighbor in class, things of that nature. The grading scale, again, the different schools, it varies from school to school, things of that nature. Okay, but there's nothing here. There's nothing really. Like I said, I'm not going to lay out the course week by week from the first day. Okay, because it's one of these things where I have it in my head. I know what I'd like to cover, and we'll just see how long everything takes, how the conversation goes. And folks, let me tell you, I don't just listen to the very wealthy people that I work with. I listen to you guys too. I listen to your questions and what you want to go over. So that's also a part of it. It's bouncing back. And this is going back to my Rutgers days. I started at Rutgers long ago in the math department. So I want to listen to what you guys have to have, what you guys are interested in, what you guys care about. I'd like to address that also. But here, so how this now, I didn't post my notes yet. And really, we're going to, the first for January, which is about, I'm surprised, but it's about 3 weeks worth of classes just in January. It's going to be from my notes. So here, and I've been working on these notes here, this thing. Now, here, just on our hand, we're going to go over break even, cost volume profit analysis. We'll go over net present value valuations, and then there's an additional chapter that goes with that. We may go over, I'm pretty sure we're going to go over budgets, So those are in various books. Some of those topics are in the finance textbook, some of those topics are in the accounting textbook. Don't worry if you're in economics class or what. Don't worry about that. What all that is. We're going to go over some what the central bank's comments are, what the patterns of personal consumption, if we're anticipating some kind of economic shocks. These notes were from about a year ago. They're pretty good. I mean, I'm going to post these. I'm going to post these on. I didn't post them yet, but I'll post these on Blackboard. What the IMF thinks of growth forecasting, things of that nature. Business cycles are very important, and you can see there's a lot of current topics on here. And then we, how the GDP is behaving, no matter what the class is. I think that's important stuff to you guys have some idea about it. How the financial markets are behaving, and then some definitions: what the Bureau of Economic Analysis is, what's an economic indicator, what's a business cycle. That's important no matter what you do. And this is some of the more financial stuff. What the Securities Acts are. We've had some assignments about that in the past. And some of the new stuff that this stuff I just posted. And like I said, this is 161 pages of my notes that I found useful in my job. Okay. I think that's pretty good that you learn from that. Deflation, inflation, especially here. These are the questions that people are throwing at me right now. I'm getting questions. What's the difference in real GDP and nominal GDP from my guys, the guys that I work for, that do all these very sophisticated financial dealings. I have three sets. This is not what I want. I have 3 sets of these notes. I have this one. I have notes 1. Here's number 2. And actually, this is the previous December's committee policy action that the U.S. Central Bank, their review of the economic situation, financial situation, what a term premium is as a definition, summary of economic projections, what the Federal Open Market Committee is, what the Federal Reserve System is, and all this type of thing. What the federal funds rate is. So for the macro classes, and again, so regardless of the class, you get a little bit of macro, a little bit of micro, a little bit of accounting, a little bit of finance, and it'll be a good 15 weeks that you spend with me thinking about this stuff. Regardless of, I have your interest at heart. Okay, I always have the interest of the folks in the cities and the Newarks and the Jersey cities and the Pattersons and the Elizabeths and the Unions and all these other places. I always have what's best for you is what I want to spend time on. Spend time looking at. Okay, so I'm the guy who manages Bill Gates's wealth and some of the characteristics of that, and what is Bill Gates real? Is it Microsoft that makes up the majority of Bill Gates's wealth? You'd be surprised at the answer for that. It's not so much just it's not just so much his Microsoft shares. It's not. It's other stuff too that you might be surprised what it is. Waste hauling and apartments and condominiums and real estate, his real estate holdings. This is what I spoke about in the fall, this previous fall, Jeremy Grantham and bubbles and Warren Buffett strategies and capital gains and dividends income. And there's video on all this of what a minority interest is, equity and debt financing, what a preferred stock is. Those are all, especially here, all of this stuff is what we were talking about at work down in Florida in the fall. Okay, so you're learning about what neoclassical growth is. Where's economic? Did I see? Where's economic growth? Is it in this one or is it in number 2? Maybe this is 3. Keynes, who Keynes is, what the Austrian school is. Yeah, here's economic growth and how what the wage price spiral is and things of that nature. We'll talk about inflation. And then also go through the numbers, kind of a situation. I didn't give you the economic model. I probably should have, but I didn't. So here, let me just give you a quick peek of what the economic model is here. Here's the economic. So what I do is every semester, regardless of where I'm teaching or what's going on, I'm always updating the CPI and things. So this is the CPI for all, or I'll just look at this one. I'll give you the definition of this, and these are the indices and what an index. We'll talk about what an index is, and then how the inflation is computed. And then there's this cumulative inflation question that came up, so I started messing around with that. But let's see what our year-over-year inflation is. Our year-over-year inflation looks like it's about 3% or so. That's much better than the 7 that it was and the 9 that it was a couple years ago. Okay, I remember talking to a colleague at St. Peter's, and I was concerned about these month-over-month numbers in 2020. I think this February one shocked me that it was a lot more than it previously had been. I was worried. I remember having a conversation. I was worried about here. This is where I was worried. Right in here someplace I was worried. And then the pandemic hit. That's around the pandemic time. So we've got a couple of years have ticked off the calendar, thank God, and we've gotten as back to normal as we could. But also I had some real estate questions or some real estate notes. And let's see if I can find it for you guys. Guys, give me a second. I want to dig into a private email, so hold on while I do that. Let's see. We had some S&P 500. Yeah, here, I got it here. Yeah, and here I could, and actually these are my notes. These are my current notes. I sent these out a couple days ago. What the S&P, what we think the S&P 500 is going to look like. What are some of the projections of the U.S. Central Bank and the European Central Bank on inflation and economic output changes and things of that nature. So Tom Lee is, and we could easily talk about this in class. Tom Lee is a guy. He was chief strategist at J.P. Morgan for a long time, and he predicted the S&P would be about 5,200 at the end of 2024. And I think I have, I have the history of it here, just going back a year. Now we're at about just below 4,800. Okay, so you could do the math on that. That's about a 10% change in the year. From September, we're up 4.5%. From a year ago, we're up about 21%. And again, this is simply the graph of that. And here's some of the projections. Here's some of the forecasts from some of here's the different Bank of America, what they think, and Goldman Sachs, what they think, and what Wells Fargo thinks, and some of these other, what JP Morgan thinks. Actually, some of them think it's going to decline. JP Morgan says we're going to lose 10%. All right, so JP Morgan and JP Morgan and Morgan Stanley and Wells Fargo are all in negative territory, but Bank of America, Goldman, and Deutsche Bank, they're in positive territory. Okay, so you have half the big investment banks, Deutsche Bank and Goldman, and Canada, the Canadians, and the guys in the UK and the folks in North Carolina, what they think, and then what the Morgans think, and the Swiss think, and the Wells Fargo out in San Francisco, what they think. Okay, so yeah. Now we didn't go through how they got to those numbers. It's again, look, there's 500 companies. You want to project earnings and figure out the value, the price per earning ratio and things of that nature. It's some work. I mean, if I taught you I could do 15 weeks and where these numbers came from, teach you the statistical mechanics that you need to get. Now, I'm not doing that, but that's what you would need to do. You would want to project the earnings for all the companies and figure out what the price per earnings ratio has been and try to figure out what inflation's been, and then try to project forward what you think the PE is going to be in a year. And that's how you determine the value of those 500 companies and what the index is going to be. That's what was done. But it's very easy to say that, but to sit down and do that is different. You need Bloomberg, and you need you need all the data in a spreadsheet or in a computer to be able to do all that. So yes, I'm not going to go through this in detail right now, but this is what the projections for Wall Street are for S&P 500 for 2024. And some of the commentary in this, and I put the bull out there. Okay, so I was trying to dress this up with pictures and things, and also just for real estate and financials. Obviously, Tom Lee is projecting that there's room to move in those sectors, and not just relying on the Magnificent Seven, or the Apples and the Microsoft and the Amazon. I forget what they all are, but it's all that. It's Amazon, Microsoft, Google, Facebook. It's those guys. What Apple, Google. I have them somewhere here. Where are they? Here it is. Apple, Microsoft, Alphabet is Google, Amazon, Nvidia, Tesla, Meta's Facebook. Okay, so those guys moved about 75% last year. Okay, and they brought up a big percentage of the market capitalization of the S&P 500. They dragged it with them. So are those 7 companies responsible for the majority of the movement, okay, in the market value of the S&P 500? You want to get to that and the impact. And also, it says the combined weighting of the Magnificent Seven is larger than that of all the stocks from Japan, France, China, and the UK, believe it or not. So that's all the publicly listed companies in 4 countries, including China. Okay, so all the Fox. See, let me tell you, I'm a Fox News guy, but all the Fox News guys, they want to make you watch. They want to scare you into watching. Say, oh, there's trouble. Trump gets in, how bad it's going to be, and whatever. China's going to eat our lunch, and this and that. And obviously, when you look at the numbers, it's a little bit of a different story. Okay, so I want you to be folks where you can look at the numbers and understand what's going on. These are just two press releases from the U.S. Central Bank and what they think their lending rate is going to be that influences mortgages and credit cards, and all the loans that are out there are influenced. All the credit is influenced by what the federal funds rate is. But in other words, one commercial bank lends its reserves to another commercial bank. The rate that they lend at to one another. Here's the European Central Bank, which is becoming more important to me. Okay, and what they think inflation is going to be, and what the headline inflation numbers are going to be, and things of that nature. And this is inflation, strong growth. Expect. Okay, this is what they expect inflation to be. And I don't know, did I put the growth numbers in here somewhere? I hope I put them in here somewhere. Growth pick. Yeah, right. It's a little cut off here, but for 2023, it's lower than our numbers. European Central Bank is expecting headline economic activity to move about 0.5%, and then in 2024 almost 1%, and 25 and 26 about 1.5%. So they're not predicting very very big movements. And let's see, do we do the we don't have projections. They don't publish the projections necessarily in the statement, but they're in the projections. You have to find what the U.S. Central Bank thinks the GDP is going to change at and things of that nature. It's in there, but it's just not released. It's released, but they don't just say it in their statement, because that's not the most important thing the central banks in America says is the change in the federal funds rate, and then the sloshing back and forth of capital to the commercial banks to either give them more, print more money for them to lend, or to pull money out of this system so they lend less. I think we're buying back now from the commercial. So in other words, we're selling the commercial banks the securities, so the commercial bank has to give this, and they have to follow the orders of of their regulator without question, believe it or not. But certainly the commercial banks do have input into. Don't think that they don't. It's not just these 200 people at the U.S. Central Bank decide what to do, and that's it. There is input from all the different banks out there. So you need people with their boots on the ground and what's going on, that kind of a thing. But like I said, I'm not necessarily speaking about all these press releases right now, but it's all in here. And actually, I could even post this, so you can see just from what I was discussing here, there'll be notes. So there's plenty of stuff to read that I'm publishing out there that's very high quality, and you guys, there's nothing stopping you from doing your own reading yourselves. When I was in college, which was not that, and folks, even legal study, when I did legal studies, which was about 10 years ago, maybe a little bit less than 10 years ago, we were online getting the court cases, but the course was still taught like when I went to school. It was a professor was up there lecturing to you, and you took notes, and he explained the case law, and explained the criminal code, and the court procedures, and whatever. That's what we were, the ethics, and those kinds of things. But when I went to NJIT, we had a library, but there was no internet. How you guys? I couldn't just go up there and say, hey, let me look up, whatever, something with electrical circuit analysis or machine design or something. It really wasn't that. It was starting, but it wasn't like it is now. In the mid 90s was the first time someone showed me, hey, here's a website address, and here's email and things of that nature. It was the mid 90s when that all started for me. But it started. IBM had it earlier. Actually, we had emails on IBM, way earlier than that. But the 90s was when it all took off. And by 2003, we had cell phones. I remember I was on the number 1 train. If anybody who knows Manhattan, that's the West Side. That goes past Columbia University, and it goes through Harlem and the Upper West Side, and 72nd Street, and all. It goes way up, I think into the Bronx. And I remember and the kids, leave it to the Manhattan kids of the time, they were ahead of everything. And I remember I was on the subway train, and it was quiet, and I was on it. High school kids had high school, so they were like 15 or 16 or whatever they were, and they were like probably how we are at 25. A kid in Manhattan at 15 is it's just, in terms of maturity, in terms of just being aware of sort of what's going on in the world. They're very aware of sort of what's going on, and all their heads were in these little flip phones. I said, oh boy, I said, it's coming. I remember being on the subway train and seeing that about 20 years ago, and here we are. Now we're like that still. So anyhow. But yeah, so there's a bunch of notes I'm going to put up, and also in terms of what you need to do, there are these models that we're going to work on, and actually here, these are the 2 templates. Actually, the first thing that we're going to talk about is cost, volume, profit, And that'll be a couple of weeks going, and we're going to really go through total variable costs and total fixed cost. We'll go through all that stuff, and that'll be good for the micro folks. That'll be good for the finance classes. So that this touches a lot of things, folks. Let me tell you, I want to teach you stuff that people are going to pay you to do. People will pay you to make these models. People will pay you to generate an income statement. People will pay you to do a projection. People will pay you to do a letter of intent or a memorandum of understanding, to write a legal document or understand the legal system or understand the tax code, right? That's really important if you really understand how taxes are, and and I'm not talking about CPA. I'm talking about understanding it. I'm talking about being able to explain to another person. You can go bananas with MBAs and this and that. Sure. Look, if you want to go work for an accounting firm, you want to sign off on work. That's an important thing. You have to have your CPA. You have to have something, some sort of credential, or several credentials. I have several. Yeah, and those are all well and good, but there's got to be a point where you're making money and you're working. You're able to be useful to society. People who are useful to, you can get someone to sign. You can hire somebody to sign something for you. Okay, but if you can understand it and build a project or build a deal, that's where you're going to make lots. You have a big earning from that. Okay, and that's what I'm hoping to teach you guys how to do. There's great videos online at Wiley and some of these other book companies where you want to get your CPA or CFA or something like that. They'll teach you everything that you need to know to get through those exams. But those people aren't necessarily going to be the people who will get to know people in government and ambassadors and finance ministers and bishops and all these other people that command all this money, and convincing them to write a check to work on a project, to build a hospital somewhere, or to do a project. Okay, so that's what I'm here to teach you to do. But we're going to go through all this, and also in terms of posting your work. And here, this is just a great example. See these predictions? I initially generated this in a Word document. Then I converted it versus file, save as PDF. I saved this thing as a PDF, and then I put together the graphics here. Actually, I cut and paste this from Excel into Word, and that was it. But you can also what you can do is you can select certain pages. So if I wanted to put this in a PDF, I can select whatever, this much of this or something like that, and then save that little segment as its own little file, and then add it to the PDF. So we'll go through, not today, but we'll go through the videos where, see this little arrow here, you click on this arrow and see what it says, this double page here, the thumbnail. Then you can go to this insert. See this? It says insert pages from file, and you can build these PDF documents. And that's what I did here. See, I typed this, and this is a table, and this is a graph, and I put, and it looks really good. And there's a picture here, right? So I want here. Oh, here's some of the real estate stuff. And look, you're gonna have to be comfortable. If you do anything that's like what I do, you're gonna have to be comfortable working electronically, working through video calls, email attachments. You're going to have to be comfortable doing that. Okay, that's people are not going back to the office. Sure, there's some news that JP Morgan's demanding everybody goes back, Goldman Sachs demands that everybody goes back. It's not for your, I'm telling you, it's not because of your efficiency that they want people back in the office. Okay, those big firms want people back in the office because they don't want you double dealing on the information that you glean from work, the advantage you have of working in a big financial services firm like that. So what I'm trying to say is, I knew a guy, and without giving too much detail, he was a Jesuit college graduate, not St. Peter's, but a Jesuit college graduate, and he'd worked for a very big private equity firm for a long time. So yeah, I'm not connecting the dots too well. And he had 7, 8, or 9 different things he was doing on the side from relationships he built while he worked for this big private equity firm. Okay, and he was doing great. He was built a big house up in Connecticut, and okay, so it's not illegal to do that, but unless the firm says, hey, by the way, don't do this, and you do it, then obviously there's something wrong. But you can see something that you don't learn at Rutgers, even St. Peter, even at NJIT or whatever it is. So many of these schools, you have to build relationships with people, and people have to trust you, and you have to be cooperative and work with people. It can't just be one way or no way. And there's just too many people, especially I'm not picking on any one school or whatever, all these academic places that sort of work like that, where it's my way or no way, kind of thinking. And that's the surest way to go nowhere is to work like that. That's if you want a bulletproof way to never accomplish something, work like that. Be difficult, And that's, that's how, you'll find yourself very much alone and with no one interested in working with you. High vacancies, big finance costs. This is office values. Office values of properties continue to suffer. This is out in LA. When my boss was out in LA recently, so I sent him this while he was out there. So, oh, thanks for saying this to me. See, I knew he was going out to Los Angeles, and I said, hey, here's something about real estate properties in Los Angeles, and there you go. And I sent him this, and he was happy. It's a 60-story building, and it's, I think, half full. It was bought and sold for 268 million. Now it's on sale for 145, I think, something like that. 150 million. So you're talking a good 30-40% loss in value somewhere. Yeah. Okay. So if you go through the numbers here, yeah, it was bought and sold for 270 in 2014. Today it was 121. Almost, that's a 50% loss in value. Because you can't guarantee the rent payments. You can't guarantee the cash flow. Because if your building's half full, you're gonna sell it based on it's not gonna be sold based on how much space is there. It's being sold on what cash flows are we looking at from this property, and we'll go through that. The reason we're talking about this, we'll go through that here. Let's see what says NPV. We'll go through net present values and value. This will be very well, and actually we'll do. There's another chapter I want to go through for the investment decision also. So it'll be a couple chapters from this, a couple chapters from accounting, and we'll cover all the real world version of all the topics in the macro course and the micro course and the finance courses. And so don't worry. Okay, so the courses are going to be all assignments. You got to put the assignment together like this example that I showed you guys here. You got to put it together like this, where your graphs and your tables and your analysis and your answers to your questions are all sort of typed out here. But you do it in Word and then convert to PDF. Okay, and I'll show you how to do that as the semester unfolds. Okay, so come to class, cooperate, pay attention when you're in class, follow the schedule, and monitor email, monitor the notes on Blackboard. Everything's going to be on Blackboard, the whole thing. So let's just quickly get to the see. Actually, here's all my that's the beginnings of all my lectures. This I have about 6 net present value. I can post these. These are 6 net present value lectures, and also there's sometimes I may not be able to come to physical class, and we're gonna have to manage that. But we'll get to that when we come to it. So here, let's just quickly look at Blackboard, this Blackboard site here. So yeah, the textbooks are here, the syllabus is here, the Excel. I'll put the notes down here. I'll put some notes down here. There'll be announcements here. Okay, that's how the course will run. Hopefully, it's this what I've explained to you guys is not too complicated. Okay, so you don't have to buy any textbooks. They're all here. And again, if NJCU or whatever it is, they make you buy a textbook, do what the school tells you to do. Okay, but I'm not commanding that you buy any textbooks. Okay, everything you need, it's all self-contained. And I'll post, like I said, I'll post my sets of notes for you guys. I'll post this stuff online for you. Okay, the Detroit Ram game is on, so I gotta go. But we'll see you soon. We'll see you soon. Thank you so much. And email me. Just drop me emails as much as possible. Some people like to text or call or whatever way you guys want to talk to me is fine. Okay. All right, folks, be well.